Again, rates this week were all about Iran. The whole story is running through the Strait of Hormuz, and when that strait's restricted like it is now, oil prices climb, and higher oil prices means higher inflation expectations, which pushes mortgage rates up. Mortgage rates move with inflation. So every headline about a possible deal or a possible blow up, that was probably not a good word for it, but that moved rates this week. So early in the week, it looked bad. Reports were saying Iran's leadership wanted to keep its enriched uranium. They also set up a new authority to control passage through the strait, and there were other signs of military buildup in the area. Oil did push back over $100 a barrel, and that hurt bonds and mortgage rates. So by midweek, mortgage rates had climbed to a 9-month high, but then it reversed a little. Thursday and this morning, reports came out that a draft agreement was in the works. So bonds reversed and pushed us, kind of back positively yesterday and this morning. But again, it's kind of reversing a little at the moment. But most lenders improved their pricing. So we actually ended the week a lot better than where we were, in the middle of the week and how it looked. Unfortunately, even if a deal gets done, there's now a floor on how low rates can fall, and that's a lot higher than it was before this whole mess started. So if a deal is signed and ships do start moving through the strait again, then the expectation is rates will drift down a little, maybe a quarter point over the first few days or so. But we're not going to see mortgage rates drop dramatically overnight. And of course, all of this can change over a weekend. We've seen a lot of action over the weekends so far, and nothing was locked in yet. On the Fed front, Kevin Warsh is being sworn in today as the new Fed chair. And the Fed minutes that came out this week were from before he took over, obviously. And that showed the Fed is a lot more worried about inflation and are less focused on cutting rates. But for us, a tougher stance on inflation from Warsh would actually help the bond market and mortgage rates over time. Two other things worth knowing, just in using VantageScore along with the traditional FICO score. That model does factor in things like rent and utility payments, which can open doors for buyers who get squeezed by the old scoring system. And we've got access to both these banks, so let me know if you have credit challenge clients or if they don't have a FICO at all. More lenders moving this direction is going to be good for borrowers who are close but not quite qualifying. On housing, single-family construction starts fell 9% in April. Builders are sitting on about 120,000 finished homes, that's nationwide, that they haven't sold yet, so they're not really in a rush to build more until that clears. There is still a tight supply across the country, and it seems even tighter here in San Diego. If you have questions in your market, just let me know. Next week is a short one with the markets closed Monday for Memorial Day. We're going to get PCE, which is the Fed's favorite inflation measure, and we're also going to get jobless claims, durable goods, and new home sales. I'll see you next Friday and let you know how they come out.